This is Short Hammer. It is the 28th of February 2021, and this is Trading Zones. So, market has been nuts. Let's go to the charts. So, if we look at where our week began, right? And that was about the 22nd, I believe. And we kind of played around this 38.88 area and didn't, well, I say 21st, but the 22nd, but we didn't really go anywhere. We dropped, and right around the 38.17s, a little bit lower, about 3800, we saw that the buyers did step in and give us a jam back to the 39.30s, right? And if you're a person that has that buy the dip philosophy, when you saw this push back up, you were hopeful that something would come of that. The reality is that no, nothing came of that at all, right? We pulled back up, and if you were scalping this is more for relief bounce. Then the selling continued, and this just really smashed. If you were sort of on the weekly, smashed any expectations of us getting back above here on the week, right? So the question is, where are we now? We're down around the 38.17s and, well, 38.08s to be honest, but down around the 38.17s in this area, right? And so if we want to look at this, the 38.80s and 39.11s were definitely some strong areas that we spent a bunch of time around those 38.80s, right? And now we're down around the 3800s. So what can we look forward to? Well, if we can't get back above the 38.17 area, then we have to look forward to the 3770s, 3740s, 3714s, 3700s, right? And if you look at this, when you look at these movements, they look as if they're insane. But if you drop down the time frame, let's check out the 1 hour. Look at how much time you had, right? How much time we spent at these different demand supply pockets, right? If you look at it, we spent time. There was time to see the next move that was coming, right? It gave you time to see. And if you drop down even on a lower time frame, you'll see that you had time to enter, exit, and to make plays off of some of these strong levels. So next week, what we watch for, can we regain the 38.17s? Really, we need to regain the 38.80s, right? That would bring a little bit of stability. Back above the 38.80s will bring some stability. Down where we are right now, we need to get back up here, in my opinion, right? If we're, if we get back above the 38.17s and we squeeze to 38.50s, that's fine. Or we squeeze to 38.88s, that's fine. But we need to get back above this area. And then once above this area, especially with the potential catalyst of the stimulus package being signed, or should I say, being approved by the Senate and signed by the president, then we'll see how the market reacts to that. If the market feels that that is a catalytic or catalytic event that we can pop off that and run off that, that will be interesting. But just play your levels. Watch for us to get back above 38.17s. Watch for the buyers to step in, and that we hold, and that we begin to squeeze and build back up towards those 38.80s. If we don't, if we're back down into the 3700s and you see a drift to the 3772s, don't automatically become bearish and think that we're never going to stop selling, right? Play point to point. Once we hit here, what we want to see is a bounce wave to retest the 3800s. And then if we can't buy up above 38.17s, and you see on that lower time frame that we're beginning to sell, and that the sellers are in control, then you'd fade that. But be careful fading um fading breakdowns, right? Because you have to be careful that you're not approaching a demand pocket where the buyers could step in, or the sellers can begin to exit, and then you see that dead cat or that relief bounce, and you don't want to be caught in that, um, because then even if you're right, you have to have the emotional or intestinal fortitude to hold through that bounce. For example, right? Let's say that you got short um, here on this breakdown. Next thing you know, you see this buying happening, right? And this buying happening. Do you have the intestinal fortitude to hold through all this? So from here, 38.14s to here, 39.36s, right? You could be down $10,000 depending how much you're in, even $30,000 depending how much you're in. Would you hold expecting this to come back down here? And are you averaging on each one of these pushes multi-day? Who's doing that, right? And so that's something to think about when you're looking at these levels and you look at these charts. Sometimes it looks as if things are, oh, it's so easy. No, it depends, right? It depends on your intestinal fortitude when you get in, and how well you can control your emotions, and sort of I'd say trust the strength of your convictions on the chart setups, right? For me, once this started to go back up, there's no, and maybe if you're looking at the interest rates, or you're looking at the bonds or something else like that that you're using to gauge sentiment. For me, once I see this, there is no sign, right, with this bullish movement, that especially when we back tested and held the 38.50s, there is no sign that we're going to continue to sell. For me, within that, I guess it depends on your time horizon, that this selling is going to continue. For me, there's no sign. So I wouldn't be averaging, hoping that one day that we sell, right? Because check this out. Let's say um, you got short here in this area, and your expectation was that this will continue to sell down to the 36 or 3500s, and they bought this back up. Are you averaging here? Are you averaging here? Okay. Are you averaging here? Are you, like, how much pain would you take? How what And even if this sold, like, how much pain would you take, and how much market exposure would you be willing to subject your account to, in holding on to a position that you feel stubbornly is right, right? So you have to have a point where you're saying, hey, if I short it here, if we pop these 38.50 time out, and it could be a tighter, it could be a 5 point stop, 10 points, but you have to have some sort of plan or structure as to what you're planning to do, right? If you fade here and you got short at 38.18, 38.17, and which I wouldn't do, but let's say you did, on this candle you got short, this breakdown, and you saw this, you saw this, you saw this. If your stop is on bullish candlestick formations above the 38.50s, they never came. What you did see was a dip back below the 38.17s. Right now, this is the thing. If you averaged here at the test of the 38.50s, oh, you're in good shape on this drop here, because you're beginning to exit most of your position, and now you will have a stop on the break back above these 38.50s. Right now, if this extends down to here, the 38.70s, I mean the 37.70s, you would be able to, just depending on your strategy, right? You could exit more of your position, the original position, from here. You can exit it down here and keep a small amount um, for any buyback up, either if you're using, um, I guess, Bollinger Bands, if you're using EMAs, or if you're using VWAP, or if you're using Elliott Wave, or if you're using what's that other thing? If you're using standard deviation, whatever you're using, right, to help you find your levels and help you get in at whichever point of the market move, then you'd be exiting and taking profits on this, right? Because at any point things can reverse, right? So everyone has a different philosophy, and I'll keep it moving. I'm not going to spend too much time on this, but next week just watch those levels. Um, get back above 38.17s, 38 50s, 38.80s. Those are important levels. If you're bullish, you do want us to get back above 38.80s. Um, and just looking at the overall market, the market had to reset. We were just too hot, right? And are we cooled off enough to begin a bull run for 2021? Who knows? Maybe, maybe not, right? But the market did have to cool off. It was just impossible that we would continue to buy up nonstop. Is it possible that we could have won a few hundred more points? Yes, but there had to be some sort of a pullback at some point. Now, will this continue? We don't know. Watch your levels, right? Whatever indicators that you're using on the intraday, on the higher time frame, right? We're below the 38.17s, right around the 3800s. If we dip to the 37.70s and buyers don't step in and 37.40s open up, yep, we're still bearish. This is interesting still, right? But if you're looking at the chart overall, even though we've pulled back, right, we're still, if you just based on let's go back, right? Look at the 2020. Look at 2020. So at the end of 2020, we were right about, what is this level? 37.50s, right? So we could retrace another 60 points, 70 points or so. Um roughly, yeah, something like right in that area, and still be above the previous year's highs. Isn't that crazy? So what are we really saying with this, oh, this massive pullback? Oh, the market is bearish. We still haven't touched last year's highs. So the market still has room to go if we just wanted to get back to where we were at the end of last year, where people were so euphoric about how great the market was and happy days are here again. So don't let this selling make you think that all of a sudden we've entered a bear market, right? This is we've just had a, just could just be a pullback, could just be a liquidation event. The signs of entering a bear market will be clear when that time has come. Don't fall for that. It's just a garbage can has gotten the steak. That happens once in a while. We'll see if 2021 turns out to be a bearish year, and if the trend will change, meaning it dips, buyers step in, and the market grinds back to the top. We'll see how this plays out. But we did need some sort of a liquidation event for people to reset for 2021, in my opinion. And it's good that it happened, and we'll see if this continues. But watch your levels and don't feel as if the market is going to nonstop sell. In fact, what I would be looking for is whatever tickers that you believe in, right? Strong companies, strong earnings that have been doing really, really well financially, right? And you love that balance sheet. Look for good entries as we sell at levels that you feel comfortable. That if it goes a little bit lower, you're okay, sitting on it a little bit. And the best thing to do is to average in. So, or scale in. So don't go all in on your positions immediately. Just slowly begin to scale in some of those things if it's reached some of the levels that you like on a higher time frame chart, right? If you like those levels and the time horizon is a little bit longer, don't feel bad about beginning to scale into stuff, right? And so, um, as we sell, there is an opportunity in some tickers for those that feel that um, they have more value to the upside. So just watch your levels for different things that you like, and if the levels, do you feel that if it drops below, okay, let me give you for example. So let's say that I'm not gonna do all that though. Let's keep it moving. I will get lost in the weeds doing all that. That's just too much. Not on this video. Okay, so RTY. Um, what we see, same thing. Pull back up here and began to sell. Look how sharp this sell is, right? Look at this drop. And at the 2170s, right, went a little bit below, but we saw that. Look at these lower wicks are showing you that the buyers are rejecting further downside push. That's what this shows you, right? Right around the 2160s, the buyers said that, hey, we think there's more value to the upside. And the sellers are like, hey, we think that the value to the downside, what we've been selling all this time, we think that that's diminished. Let's go ahead and exit our position. And you saw this buyback up, saw the flare down here, but the buyback up, right? And so now, what are we watching for? We did back test these 2230s. Look at that red line. There's an interesting area. What are we waiting for to see? Will we make a lower low? If we crack the 2150s, so we go back to the 2160s, if we crack to the 2150s, that opens up the 2111s, right? So what we want to watch for if you're bullish is we want to get above the 2230s and we want to pop the 2240s and squeeze. You want to get up in this is the sweet spot if you want to pop this thing back up. If we sell back below here, this opens up the 2111s and 2081s on the Russ. So that's interesting. Amazon. So if you remember last week, what we talked about on Amazon was wash the channel, right? 3220s by 3080s. We got back inside the channel, and what happened? Channel rules all the way to the bottom, right? Pulled all the way back to the top, back through the bottom, which would be, if you're looking at this, right, a break of pattern. Look how far we dipped, right? On that break of pattern, right? So the 3190s did not hold. That was the level that you'd want to see to push us back through the 3220s, sort of like this. Look at this. Pull back in, held, boom. Tested again, took off to the upside, right? On the initial touch, you could have got a little bit of money off of this. But look at this roll, straight through to the bottom. Bought back up. Look at this, right? We caught a hitch around the 3140s, a little bit of pullback here. But then look at the selling right through the bottom. But what you would expect on the break of a long term channel is that we would retest the bottom of the channel. So the break through the bottom would give you sort of a rubber band pullback to this area. Why? Because this level has held for months. Look at this. This is all the way back in November. Look how long that you don't see any bearish candlestick continuation below the 3080s. Not until here. And even though we had, this is overnight, right? This isn't even intraday. The next candle, the next day, it pushes us back inside the range of the 3080s. So what are we looking for this month? I mean, not this month, but this upcoming trading session or this upcoming week, right? For me, I want to see if I'm bullish, the bottom of this channel hold, and that we begin to buy back up towards the 3140s, right? That's what if you're bullish. If you're bearish, you want this to open with a gap down. You want to be gap below the 3080s, and you want the selling to take us down to the 2950s. Now, the 2950s is an area that we've watched, and we said, hey, that would be a good area to test or to sell into. Um, for Amazon to kind of reset a little bit, right? And for us to get a nice place to buy off of for 2021. We'll see if that happens. Maybe, maybe not. But if you look at where we are now to where we were the last few weeks, where we're talking about the 3400s, look at the difference, right? How this chart has sort of just fallen apart. If you're a bull, if you're a bear, this just come together for you. So we're just watching here to see if the 3080s hold. If they do not hold, we want to see if we get lower lows here. This is a pattern break below the 3080s on Amazon. It's interesting. So we'll see how this plays out, whether we gap down or we gap up. That's going to be interesting, right? So we'll see how this all plays out. But if we sell below the 3080s again and make a lower low, the potential for us to drop about 100 points is pretty high. So we'll see if that plays out on this upcoming week. and also how the potential stimulus package being signed and people getting money into their hands could change what's going on now, right? We'll see if there's a change in sentiment in the market. But if you look around, bonds, whatever, just a bit of everything was selling. So there really wasn't a place where someone could have found shelter this past week. A lot of things were selling, a lot of things were just dropping. So if you want to look around at different places, whether it's real estate for defensive or it's energy for defensive, quite a few things were on the sell side. So keep it moving. Keep it moving. Back to Netflix. Netflix is interesting. We were saying coming into the week that what we would want to see on Netflix is a buyback if you're bullish, a buyback above this trend line, right? This is a longer term trend line. And didn't get that. The 550s didn't regain and hold and give us a run through into the 600s. Instead, what we saw was a separation from that trend line, right? An extension down into the five teens, and it didn't make a lower low wave, meaning below this wave, but it did dip, and the buyback up did not make a higher high wave, meaning higher than this wave, right? The 560s. We didn't hit the 570s on this buyback up. Instead, we tapped the bottom end or the underside of this trend line and sold, right? So technically a great setup if you watch the back test of this trend and how we didn't buy back above and the dip. So that's cool. So now what, right? So from the 530s, what you want to see, this was interesting, like a little push up here, a few dollars. What you want to see this upcoming week is a buyback above the 550s and a regain of the trend. With all this movement, don't be surprised if the market does a little bit of consolidating, right? It's possible that we can see more range movements, but usually, whenever you see expansion, where the market expands and moves and it's volatile, it usually leads to a period of consolidation or contraction, right? And we'll see how the market digests these moves that we these sort of these volatile moves. And usually when you see these crazy moves, it's because people are trapped and they're trying to unwind these positions and they've got to get a lot of stuff out the door. So we'll see if this past week was just the beginning of the selling, right? Or if this past week was nothing. So we'll see what that is. If it was just people repositioning, um, whenever you see outflows out of one area, they're usually inflows into another. So as the market begins to toss and turn, what you want to do is look to see where the money is flowing. Where's the money going? If the money is coming out of one place, it has to be going someplace else. And that's where you want to be. Wherever the money is going, that's where you want to be putting your money right now. So just keep an eye out um, for the sectors that may be bullish if the market continues to pull back. So, specifically Netflix, that's what we want to see. If the 530s hold, then we do have an opportunity to buy back up through the 550s. And you do want to regain the 560s and you want to pop the 567 and go up. That's what you'd like to see on Netflix if you're bullish on that. If you're bearish on Netflix, what you want to happen is you want a gap down. You don't want us to go above the 550s. You want this level to hold, and you would prefer that we sell and that we get below the five teens and sell down into the 507s, 504s, and the 490s. This is where you want to be, way down here. Now I'm going to extend this 493 area. I like this line, but you want to be down in that area if you're more bearish than not. You want this thing to continue to sell deep, into the upper 400s. But we'll see if the market is too strong for that to happen. We'll see. NVIDIA. NVIDIA is hilarious. So one of the levels that we've liked on Nvidia is down here when you start talking about the 530s and the 540s, right? Above the 540s, we're more bullish. And so where are we poised right now? Right above the 540s. So what should we watch for? We did see that we did bounce right here around the 530s. That's where we sort of found buying, and the desire would be. And if you isn't this funny? Do you remember when we drew this line um, last week, where we were like, hey, this is a line to draw. If we can't get above this, watch for the drop. And so what happened was that we sold. We didn't get back above that line. And this is a funny line. We just kind of drew this. You can check the last video if that's even interesting to you. But we see we had a paint here of these 530s and a buy back up. And then we rolled back over and went through this bottom, the 530s, but we held at the 531s. Buyers did step in and push us back up, right? So going into this week, you want the 540 here, this area to hold, and you want us to get through the 555s, and you want us to buy if you're bullish. If you're bearish, you want negative drift below the 530s, and you want this to open up the 514s. That's what you'd want to see if you're bearish on NVIDIA. Facebook, Facebook being Facebook. So we we pushed up here. If you watch, we found buyers around the 254s, 255s, right? See this line. And yes, this line was there last week. Check the video. We pushed back up, and funny, we touched the 267s. We went along that area, couldn't find buyers above that. This is a selling pocket, right? Or a supply pocket. And we went back down. We dipped below the 254s, um, but that was overnight, and it pulled us back into the 260s, and then we pulled back into the 250s. So all these lines, if you look at them, did provide levels where if you're on the lower time frame, you could begin to see that the buyers were rejecting the upside at all these wicks, and even here the buyers rejecting the downside. We bought back above the 254s. You look at these levels; they played out really well on the week. What you want to see if you're bullish on this, you want us to get back above the 264s and above the 267s, and you want to squeeze. If you're bearish on Facebook, you want us to drop below the 250s, but you want to be careful when you get into the 240s, because remember, the last two times that we hit these 240s, the buyers did step in and we had a nice reversal here. So you sort of have to wait to see how this plays out. Not meaning that you don't trade, right? You still get in, but you have these levels in your mind as levels, or you could draw them on your chart as levels where you want to watch for potential change of direction. Microsoft. So looking at Microsoft, what we were talking about last week was the 240s needed to hold, right? If you're bullish on this, you want the 240s to hold. Did that happen? No, we sold. And when you gap down, what you usually wait for in a gap down is a back test of the gap, a close of the gap in a sell. But it's just been too weak. And we're now below the 234s. We saw we went along this level. Look at this, right? Clear. How many times do we back test this level and drop down? So buyers in the 220s, 229s, to 226. That's beautiful. Look at that. So if I'm watching Microsoft, right, what would I be looking for? Um, I will be looking for bullish candlestick formations above the 234.80s, this line right here. So if we're up in the 235s, I may be interested, right? But my stop would be the 234s. So if I got long this on a break, if we had a gap up here, my stop would be the 234s. Anything in the 234s, I'd be out, right? So I'll be looking for a bounce up into the 240s potentially. If we stay down here below the 234s, we've seen buying step in here before, right? Here in the 229 area. So that's like a small little pocket that you have to watch for. If I start to see bearish continuation below the 229s, upper 220s, and we're dipping below here, then I'll probably be short into the 221s. But I'll be watching this carefully. And when I say I'm short into the 221s, People can be so vague about their positions and how they do things, and usually vague when I do these videos about the positions. But my strategy, um, in this particular case, would be in more than one contract, right? And if this thing sells below here, begin to scale out, get the heck out. Like, I'm not waiting for it to hit 221 to sell my first contract. And if I have one contract, if this begins to go my way on the lower time frame, I'm going to be using pivots on EMAs and other things to be able to say, hey, the momentum or the sentiment may be a little bit changed on this setup, right? I'm out. And those are some of the things that I look for when I'm in a trade, right? And even if I was to say, hey, the market opens up and we're flat, we're at 232, we're at the midpoint, so almost to 231 where we could buy up. That's a potential demand pocket, and below the 234 that we've sold below. If I got in here, the first thing I would do is I'd wait for a pushback up near these 234s, and then I would get short that, but my stop would be probably right around here, 235s. So as we pushed up into the 235s, if we crested 236, I'd be out. I wouldn't be in. So that'd be a $1 stop there. But the other side of that, my profit would need to be a few more dollars, right? You can do 1 to 1 or you can do 2 to 1. It just depends. But the that's what I would be looking for on this. So when people show you different levels and, oh, I'll take it here to here or this point to this point, for me, I like to scale out in the middle just in case at some point that setup reverses on you, then you've already captured some of the profit and you can cut for break even. Just my humble opinion. Apple being Apple, nice selling. Um, so in the past, what have we seen? We have seen that we have found buyers in the upper 120s, right? And so where do we where did we um sort of begin the the week? Right around the upper 120s, right? And people may have been hopeful to, try to get in there for a buyback up. Instead, what do they do? We had an extension to the downside. The 119s buyers did step in. They pulled us right back to the 127s, then dipped us back down, right? So watching Apple for this upcoming week, we're below the upper 120s. So to me, this chart looks bearish, but I'm not going to assume. I'll wait to see where we open. And if we open above the 121s 70s, then I know there's room to 124. I'll watch for that first, right? For me, I don't I don't jump in mid ranges. So if we open up here, I'm not looking to get short or get long this with the expectation that, oh, maybe it's going to go to this level, or maybe it's going to do this. It's going to sell back below that level. I'll wait for an extension into the level, and that for me will give me a setup, whether it's to the downside or the upside. Once it gets near that higher time frame level, now I look at the lower time frames for intraday clues of the potential sentiment and the movement of that particular ticker. So to the downside, watch 119, 116.94, 113.94, 111s. To the upside, above the 121.90s, the 124 70s, 127.40s, and 131.70s. We'll see how Apple shakes out, but those are the levels to watch, the immediate levels to watch on Apple. Intel. So Intel, even though we've dipped into the channel, um, the initial dip in, look at the buyback up above that, right? But what you'd want to see is a higher high above the 63.70s. We didn't see that. We're back down the channel again. So for me, I am watching this. It's like, could you buy the back test of the channel? Yes. Am I going to be long this at this area? No, because I would need to see a break above the 63s to be really interested in this. So two things I would look for: either a dip into the 58.80s and a hold, and then us to be in the curve back up. That'd be interesting. And then I could have a really tight stop here at the 5800. If we hold the 58.80s, the 5800 hold will be my stop. Or we open and we're above the 60 the 60/90s here, and we squeeze back into the 62s. So that's something to watch for on this. If we sell below the 58.80s and there's no buying in the 58s, that opens up the 56.90s and the 55.70s. That's what's interesting on Intel. So let's go straight to CMG. Um, Watching CMG, the thing we mentioned, the 1510s by this level here, the 1460s, right? And so what did they do to start the week? Gap us down. We couldn't get back above that level, right? So from this point, there was weakness. And if you look day to day, look at the gap. It's just insane. But we did find buyers above the 1340s, and it pushed us back up into the 1440s, and we didn't quite reach the 1460s. We're below that pullback here. We found buyers at a higher level here. Is a higher demand pocket, 1390s, and it brought us back up. Until we get back above the 1460s, there's just nothing here. Like if you're bullish, right? You want to back above the 1460s to be able to ride this elevator up. So from this point, I'm just watching this. Like CMG is funny. You have to me, CMG is a wave trader. You have to trade this in waves and just use different strategies to reduce your risk. That's my take on CMG of how to trade this thing. You find the wave and you ride that wave. If you're trading this naked, whether you're doing just straight up shares or if you're doing straight up naked options, uh, a lot of times you may see. Um, I'll give you for example. So let's say this thing was dropping down at this level, right? And you felt bullish on this, right? And you like, okay, heading into the evening around the 1430s, I'm gonna get long. And so you pay $1,000 to get long. You watch this gap down, you're like, oh man, I lost all my money. Then this thing the next day, you get a little bit of buyback up here. Some people would get out. CMG, look the next day. Look where you are. You're here. You're $10 above where you got in. But what you have to watch for though is what was that theta burn. So this is just one of those wave traders where you have to find different strategies that allows you to play it if you're interested in CMG. That allows you to play it, and you have to really have the intestinal fortitude to um, to play these waves because they're definitely some pretty vicious waves. But as spready as this thing is on options, and as funny as the volume can be, when it begins to move in a direction, it usually moves point to point. McDonald's. So, um, my thing on McDonald's is it needs to be above 217 to be bullish. Other than that, it's inside this range, right? And it just dropped below that range. It's at the 206 level, which is the bottom portion of that. So let's scrunch this up so we can take a look at this. The lowest portion of this range over the last few months has been this 206 level, right? We've seen a few paints below on the 4 hour, but no bearish continuation below that level, right? So the expectation here is that we could buy back up. We'll see if that happens. If we begin to see bearish continuation on the higher time frame below this level, that opens up the 201s. Until that happens, from the 206s, watch the 20940s, the 213s, and then the 21690s. I'm probably going to be watching McDonald's for this upcoming week. Why? Because it's at the low end of a small channel that we've been in for a few months. So the potential for buyers to still be there, for there to be a demand pocket here, is actually pretty high. This is interesting. We'll see if we continue to sell. I'm going to watch. Like for me, I like to see the sentiment of the week. So I want to watch to see that when we open up, right? Are we gap down? Are the sellers in control? Or is this thing more stable and grinding sideways? And are the buyers looking for an opportunity to jump in, try to ride this up for a few dollars? So I'll be watching McDonald's to see, just to set up on a week where we open on Monday and then where the market sentiment will be Sunday, right? So you watch those futures. Where is the market sentiment when we open? Are we more cooled off? Are we more sideways consolidation? Or are the sellers still in control, right? Have the buyers come? Are the buyers back? Are they buying it back up? So it's usually a good cue to see what those futures look like. And then the next day, when the market begins to open the pre market, you kind of get an idea of the sentiment of where things are. So we'll see. Goose. Thing is nuts. I have not been able to trade Goose. It's all over the place for me. And so in a week where the market is just, selling, um, Goose has not been, right? Goose has had some slight pullback, but look at Goose. For the most part, Goose has been strong. So if you look at the movement since earnings, early February, Goose has held pretty well. It's just been strong and buying back up. So break of the 4740s. Let me see. Do I have the next stop is the 5216s or the 52s? So I'll be watching Goose for the break of the 4740s and see what we get here. See if we see a little bit of upside here. With Goose, to be honest, um, when I trade it, I usually get in the money and I'll just leave it. I don't really try to manage it too much because I don't go too heavy into Goose. Just because of the movements of Goose can be weird. So I tend to stay away from it unless I have a very exaggerated move like what we saw back here, right? When we saw these shenanigans, all this, that's when you buy Goose because you're like, there's no way that look at this. There's no way that Canada Goose is going to just be a nothing company. It's a good company, right? And people tend to like their products. So yeah, so we'll see. But those are levels on Goose. I'm not saying go buy Goose and hold Goose or anything like that, but I'm just saying that it's been strong comparable to other tickers as of late. And so we'll see if this trend holds or if we begin to sell. But I would be watching for a buy above the 4740s and see if we see bullish continuation above this into the 52. See if that's possible. See if that opens up there on Goose. That's interesting. If we sell, then I'd watch the 4390s to see if the buyers step in. Then the 4140s will be the next level. Then the 4029s is the next level. But if the $40 mark breaks, then that would open up the 3760s for me. That's what I'll be watching for on Goose. Dollar Tree with earnings next week. This at a great level. Um, I always like Dollar Tree. I'm not gonna lie. It's the way that it moves is so awesome. Um, so we're opening the week and we have earnings and we're back down near the breakout levels, right? This is so awesome. So for me on Dollar Tree, I will be watching this closely. We are almost back to the levels that we were for last earnings, right? The $94 point, $94 mark, right? That's just interesting. So we'll see if we're actually at that level um, when earnings are announced. And hmm, this is what's interesting. Dollar Trees usually do really good when the economy is bad, right? So I'm wondering if um, I know we have signs in the market that things have just been bubbling like crazy, but the average person, like most people, aren't really doing well financially right now, not in the country. And whether it's furloughs or companies being closed, I'm wondering what Dollar Tree will be like. So I'll be watching Dollar Tree, and I'm actually going to get with Elisa to look for a low risk option strategy to sort of trade the extensions of this, right? I'm not gonna play in this area. I want sort of like if this thing does an extreme move, I want to get an extreme reward. So I'm gonna be looking at Dollar Tree. But from this level, we're right around the 97.70. So the upside is 101.95. Above that, 106.39. Below, we have 94.60s and 91.40s. I think Dollar Tree is interesting headed into earnings. I will be watching this for extended movements to those levels to see if the buyers are still there or if the sellers step in and they push this thing down. I think that's interesting. Tesla. So if you remember last week on Tesla, we were at the 780s. And my statement was this: I'm not interested, even though Tesla has bounced in the 780s. I'm not interested in being long Tesla unless the buyers gets above the 819s. What happened? Gap down, right? So this shows you something different. The buyers have held us around these 780s, but we saw the separation. Where was the first hitch? 713s, right? Then what do we have? Look at this. Look at the gaps. Look at this drop. Next stop, 650s. We had an extension overnight down near the 616s. Buyer stepped in, pulled us back through the 713s, curve halfway, come right back down, right? This is interesting. So these levels did hold up. These lines, you can look at check our last video. These lines have been there for weeks. These are levels that we like on Tesla. So going forward, if we go back below the 650s on Tesla, that opens up the 616s, then opens up the 500s. If we buy back above the 713s, that does open up the 780s, but we'd have to get through this little hitch here, right around the 746s. This area, we'd have to get through that area. And above that, we could see a rise. So watching Tesla closely, for most people, as Tesla sells, they're just going to look for better positioning. So as this thing drops, for those that missed this run up, they'll just be looking for areas to get long on Tesla. Like it doesn't really matter how low this goes. I'm pretty sure that people are going to be looking for levels to get in because the expectation is that it's going to buy right back up. Me, I will just be watching the intraday levels. So these higher time frame levels to me are great. I'm not swinging Tesla, so I'll be waiting for it to drop down to some of these levels, and I'll play it intraday off these demand pockets, or I'll be shorting it intraday off these supply pockets. Meaning that if it gets back to this area around the 713s and we see sellers in place, and I'll be short. If we dip down around 651s and we see buyers stepping in on the intraday, I'll be long. That's the long and short of it on Tesla. ZM, um, we wanted to push into the 460s. We didn't get it, right? And so this is the trend line, right? We're saying, hey, what we would be looking for this upcoming week is to play this trend line, and the expectation would be that the buyers would step in. Never got a chance, right? We opened gap down below that trend line, and then we sold, right? And look at the selling. Look at this overnight. Just how they just dropped it right into the 370s, right? And so what we'll remember is the um the 360s and the 350s are a pocket also along with the 370s and the 390s. What they did was to make it clear that the 390s would not be a potential area, right? So we gapped down below that, and we sold. They pushed us back to back test those 390s and gave an opportunity. But when that happened, overnight. So, and then they rolled us right back down to the downside, right? So right now we're back in the 370s. We have to see if this holds, but we're on the cusp of earnings right around the corner. So there's going to be probably a nice move here where people get to see um, the sort of the balance sheet. So all this hype and all this buying, how well did ZM really do over the last few months? And the next question would be, what do their projections tell them, right? Which and so this is going to be a really interesting stock to watch, right? This is one of the work from home leaders, right? So what we want to see is, do they project when they do their guidance? Is their guidance that, hey, we think that this work from home phenomenon is going to be with us for a while based on the pandemic, and we think that the future of work has changed forever, right? That's one narrative. The other narrative is, from what we're seeing, we think companies are going to go back to the modus operandi, to like the standard operating procedure. They're going back to what we used to do, and our guidance isn't great because we don't think that we have the ability to either maintain what we have or to gain more market share. So we have to see how they guide, and that will be interesting overall. People may use that as a gauge to look for other trades. So from this 3375 area, watch 346, 301s. Doubt that's going to happen, but hey, um, the 401s, the 430s, and the 460s. So we'll see how this plays out. I am not touching this thing till after earnings, right? Yeah, just not interested. Really, just not interested. The most I would do is put on a super low risk options play for the edges, but I probably wouldn't even do that on ZM because ZM is who this thing could be nuts. So we have to wait and see. Okay, Target is next. Target has earnings coming up this week, right around the 181 area. We have to see what happens. I will wait for the reaction to Target, and then I'll play that direction. So we'll see what the reaction to earnings will be, and then we will follow whatever that trend is on Target. To the downside, 177th, that was our last hitch. Below that, 172s. To the upside, we have 187s, 189s, and 190s. I don't really have any theory on Target, to be honest. FedEx, nothing burger, right? Below the 258s, we've got Butkus. So we'll see what this thing does with earnings coming up in mid March. Um, I prefer another dip to the 240s, to be honest, but we'll see what they do with FedEx. Whirlpool, durable goods. So we're above the 187s, below the 194s. I have no interest in this mid area. I need an extension below the 187s to open up the 180s, or above the 194s to open up the 200s. I wouldn't necessarily even be looking for the 204s, but just an extension above this would, for me, be nice to look for a potential play. But Whirlpool can be funky, and I'd rather there be an exaggerated movement to get just where there's some sort of excitement or interest around the ticker. Other than that, I usually will not be in this trading unless there's some sort of over exaggerated move or some type of news where we can see a trend or a direction. Goldman Sachs and no lines traded this with pivots. Thing is nuts. We'll see if we retrace below the 310s, but definitely love this thing. They played a few times. I love Goldman Sachs. And it's just insane, right? And one of the key things that we talked about was for the market to dip, we really needed tech to come off. If tech does, I mean not tech, we really needed financials to come off. Tech has been funky and been kind of weak, right? Other than that 1 week where tech ran, tech has been really bleh, right? But financials has just been insane. And so what we waited for this week was for financials to come off. And if you watch that last video that we did, we said, hey, watch financials. Financials need to come off in order for the market to sell, right? And even though we had a pullback, there was still, I'll say, some dip by sentiment in the market until we started to see this. And then people are like, oh no, because financials has been what the market has been riding for months. And when financials does this, the market needs to find a new horse to hitch its wagon to. And tech just wasn't it this past week. So we'll see if there is a buyback up off on these financials. But I would just be careful, right? For me, I've just used these higher time frames and I watch the intraday. 320 is a level. We'll see if this 320 holds, right? And if we buy back up or if we continue to sell down to the 310s. But um, if we hit the 310s, then I have to see if the buyers step in to buy us back up off these previous highs. And if you look at this pop, look at this pullback here, look at this breakout formation. It's awesome. But just watching it, you see these levels, these higher levels. I would watch the hitches. Every $5 is interesting, it seems, on Goldman Sachs. And I'll have these lines probably drawn in for next week. Just when something breaks to all-time highs, what I do is I use the power of pivots because I need those levels. I'm not trying to guess here in the middle. I just because I'm a retracement trader, right? So I need something else that's predictive in nature that can tell me what the next move could potentially be. Righty. And back to our SPY that we haven't drawn any lines on because we are into the futures. Um, so we're at a level, right around these 378s. We're above that, and we'll see if we can buy back above the 379s and touch the 380s. If not, this opens up the 374s. Look at this gap area in between here. We'll see if we sell below the 378s. That will be interesting if we do, right? But look how these levels work out. Paint here, paint here, and we'll see if we see a lower low here. If we see a lower low, it opens up the 370. So we have to see what the futures do. Um, if you like this video, please don't hesitate to tap that like button. And if you would like to see more content like this, please subscribe to our channel, Power of Pivots, where you can look forward to receiving videos not just from me, but videos from Elisa as she shows you how she utilizes her Power of Pivot script to find great intraday plays, great pre-market plays, great swing plays, great post-market plays. Thank you so much for your time. Have a wonderful week of trading, and please stay safe.